before we break the numbers, I want to bring in Alan Knuckman, Chief Market Strategist at BullseyeOption.com, to scratch the surface on this commodities discussion. Alan, happy Thursday to you. What's going on with crude roaring back here at $68?
Yeah, we've talked many times about how it's disappointed. And, we get these bounces, but it fails. 75 is an important pivot. It's the halfway level between the 65 and the 85 that we've been in for more than a year. So it's important to keep an eye on that. But I'm very disappointed. There's been every reason for crude to go up, and it hasn't. Whereas there's been every reason for gold to kind of have some profit taking, and that hasn't either. So, common sense doesn't come into play. You have to trade what you see in the charts.
All right, I like that. I usually play a game in the office, Alan. With the market at 68, I feel like it's a coin toss oftentimes. Right. Which would you say, 78 before 58?
Yes. At some point, the dollar is going to be supportive. And again, I use oil as an economic barometer. And I still feel that the stock market is real strong. You were talking about the correlation between stocks. That sometimes happens, but often here in the last year, obviously, there's been a disconnect.
Okay, so 78 before 58. Again, we're at 68, so $10 padding on each side. And I'd have to agree with that, because 58 would be more like the Fed's cutting 50 basis points, right? The demand concerns are starting to not only loom, but grow. And I feel like yesterday's CPI data kind of shelved them a little bit.
Yeah, I mean, we've got low inflation numbers. Everything is bullish, except for crude oil. And for some people, they look at low crude prices as being bullish as well. Like I said, focus on it as a barometer of economic activity. And I'd like to see a little bit more demand here, but things can quickly change. You know how this works. When a market gets overloaded on one side, it can quickly bounce the other way. And we'll see if we get some follow through above the 70 level on the crude oil.
Okay, speaking of that, we just had some data come across the wire here. Alan, I know you're not much of a numbers guy, but you're going to have to humor us a bit here today. Let's talk PPI. Market's coming off about 5 points, no big deal, but it did come in a little higher than expected. I have PPI core month over month at 0.2%, Alan. Now, it looks like last month's got revised sharply lower to down 0.2%, so that's going to get cheered on, I would bet. Core PPI year over year, 2.4%. That's below what they were looking for, 2.5, in line with expectations. The headline number, again, a little higher than expected month over month, but looks like a little bit lower than expected year over year. You haven't had a lot of time to break this one down, but maybe not necessarily the major market mover, considering the CPI data yesterday. Jobless claims, Alan, 230,000, just over analyst expectations for 227. What's the read on the numbers here?
We're still in a bull market until proven otherwise, and we're always fighting the last war. Inflation has been beaten from a data standpoint, not from a psychological standpoint for the consumer, but it's been beaten. It's the situation has been handled. We're in a soft landing, so everything still remains positive. Yeah, we're going to have some cuts, and it looks like we're going to have a series of cuts, obviously, over the next year or so. But this is all positive news. And it's pretty amazing. We're down at the 2% level for inflation. And I've seen some concerns that we could go in a deflationary environment. And you think of the big picture, AI is going to add to lowering costs across the board, just like the internet did.
Jamie Dimon warned of the fact that stagflation is not off the table yet.
Yeah, I don't get into these handles. I don't get into these titles, recession, stagflation. I don't care. I trade what the charts tell me. There's always opportunity, and that's what you want to look at as a trader. You don't want to have any strong opinions of what you think is going to happen from a technical standpoint. You want to have high probability positioning and trade with what the market tells you.
Yeah, every time I had a strong opinion, it cost me severely, right? Yeah, very expensive. The longer I stuck with that, especially, right? Alan, talk to me a little bit about, again, the data here today, the jobless claims. I mean, this is signaling that the economy is kind of chugging along. There were some concerns, right, after some of the manufacturing data, but I know you're not a numbers guy. Just tell me, Alan, is there even a computer in front of you? Are you looking at these numbers that can say come across the wire, or are you just kind of, again, you just looking at price activity and reaction?
I look to see how the markets react, and there's an old saying that price makes news. So I'm all about the price, and that's got to be my focus. And yesterday was a great example. Yesterday had a complete reversal. It was a test and reject. We got to 5,400. That was kind of the halfway point of that August rally, and we held that level, and we bounced right off it. So you can see kind of a 3 consecutive days where we tested it, rejected it, higher lows each and every time. 5,500 is important here. We've got above it. Another attack on these highs. Let's remember, just 10 days ago, we were within, I don't know, 0.1% away from the all-time forever highs. So it's just a game of psychology as much as anything else. And people get overly concerned about, essentially everything. That's human nature. You've got to step back, look at the chart, see how things, not necessarily the market action, but the market reaction, as you well know, is more important most times.
Yeah, a good point in terms of a reminder that we weren't just a matter of weeks ago off just shy of those all-time highs. And I looked at the chart. It was within 10 trading days that the Dow posted a new all-time high. So is that why we're seeing gold hold these upper levels? Some bond buying right now. We kind of scratched the surface on that discussion earlier in the show. A little diversification, investors kind of looking to maybe buy some insurance, Alan?
I'm just keeping an eye on gold and the fact that, we've been between this 2,400 and 2,550 and just going sideways for 2.5 months right now. A breakout to the upside sends it to 2,700. So, that's what the charts are telling me. I'm trying not to think too much. I don't know what the catalyst is going to be, and I don't care what the catalyst is going to be. We haven't had any major profit taking in gold when oftentimes you would think we should have. But I think the dollar maintaining, I want to see another test of that 100 handle in the dollar, and that should be the spark. But you'll know it when you see it, and that's what it comes down to.
Alan, I love the conversations we have. It's a very analytical in terms of breaking down the data, again, as I can kind of pull it out of you, as I force you into that situation, I feel like sometimes. But you participate, but also in terms of the levels, right, which is always key to have areas that you're watching, but also in terms of just kind of that approach towards trading mindset, what you just said. In terms of, it sort of reminded me about a saying we used to have, don't just, counterintuitive to the don't just stand there, do something. It's don't just do something, stand there, stupid, because we tend to kind of get in our own ways as traders, right? We overcomplicate things versus like you're saying, hey, I don't overanalyze the data or overanalyze stagflation versus deflation, right? The 3 or 4 letters prior to the word. I'm really focused on price, and price is king.
Right. And then the key is there's going to be guys that are a lot smarter and not better number crunchers than you and I.
Yeah.
And they're going to participate, and they're going to, use their input to buy or sell. And that's going to be reflected in the market. So, I'm a market watcher more times than not. Like you said, a lot of times you got to keep your hands down and just evaluate what's going on and take advantage of these endless opportunities. Let's remember when we were younger, Ben, you could only trade what pit you were in. Now you can trade any market, any direction, anytime. There's endless opportunities. So you can be selective. You really got to find a reason not to do a trade instead of finding a reason to do a trade.
I like that. That's a reminder of the guys that used to try and trade multiple products. You'd see them running around like chickens with their heads cut off around the trading floor. Alan, are you a poker player? I feel like with this kind of insight, this input, this strategic approach towards gaming, that you would be a prime candidate, but yet I've never seen you at one of Oliver's games.
No, I don't play because my face. I got to tell.
You're an easy read.
My face will tell you anything.
Well, it's the big smile, I think, more than anything else, right?
And I know I'm the sucker. So if you don't know who the patsy is, and I know I'm the patsy.
Yeah, I'd love to see that smile light up with aces, and you're sitting there. And Alan, appreciate you joining us, taking a look at the numbers and talking markets here with Alan Knuckman, Chief Market Strategist at BullseyeOption.com.